Hello, this video is about understand your risk tolerance. Risk tolerance refers to the risk you are ready to take when investing in funds, stocks, and bonds. If you have got high patience for risk, you are secure with the probability of losing money in trade for the likelihood of achieving higher gains. This makes you a hostile investor. But if you have a low risk tolerance, you choose investments that aren't likely to lose value. It shows you are a moderate investor. You can invest more violently if you have more time for your funds to gain from a potential loss. If you require funds soon and can't afford for your funds to lose money, you will need to be more moderate. In other words, the more time you have, the more violently you fund, the less you have to fund. Know your time sphere. The time sphere refers to the number of months, years, or decades you plan to hold an investment before selling it to achieve a specific goal. Ambition. Your time perspective is influenced in part by your financial goals. For example, if you hope to buy a home in the next 5 years, your time sphere for the amount you spend on the house is 5 years. But if you aim to retire in 25 years, your time horizon is 25. What is risk tolerance? Risk patience. Risk patience is a degree of risk a funder is willing to endure given the volatility in an investment's value. It is an essential component of investing and often determines the type and amount of investments an individual chooses. Greater risk tolerance is often synonymous with investing in stocks, justice, funds, and conversation traded funds, ETFs. In comparison, low risk tolerance is usually associated with purchasing bonds, bond funds, and income funds. Comprehending risk patience. All funds involve some degree of risk, and knowing one's risk tolerance level helps investors plan their entire portfolio and determine how they invest. Investors are classified as aggressive, moderate, or conservative based on risk tolerance. Risk tolerance assessments, including risk-related surveys or questionnaires, are available online. Investors should also review historical returns for different asset classes to determine the volatility of various financial instruments. One factor that affects risk tolerance is the investor's time horizon. Having a monetary goal with a long time sphere, a funder may have more huge benefits by cautiously investing in higher risk assets such as stocks. Alternatively, low risk cash investments may be appropriate for short term financial goals. An investor's future earning capacity and other assets such as revenue, pension, social security, or an inheritance after risk tolerance. Investors can take more significant risk with investable assets when they have other more steady sources of funds available. Moreover, investors with a more extensive portfolio may be more tolerant of risk as the loss percentage is much less in a more extensive portfolio than in a smaller one. Violent risk tolerance. Violent investor with a high risk tolerance is willing to risk losing money to achieve potentially better results. Aggressive investors tend to be market savvy, understand the instability of securities, and follow strategies for achieving higher than average earnings. Their funds emphasize capital appreciation rather than income or preserving their principal investment. These investors' asset allocation commonly includes stocks with little or no bonds or cash allocation. Reasonable risk tolerance. Moderate funders want to increase their money without dropping too much. Their goal is to balance opportunities and risk, and this investors' method is sometimes depicted as a stable method. Frequently, moderate investors develop a selection that includes a mixture of stocks and bonds, possibly as a 50-50 or 60-40 structure. Traditional risk tolerance. Conservative funders are willing to accept little or no instability in their investment groups. Pensioners or those close to retirement age are often included in this classification as they may be reluctant to risk a loss to their principal asset and have a short-term investment strategy. The conservative investor object is guaranteed and highly liquid vehicles. Risk opposed persons usually universally opt for bank certificate of bond, CDs, money markets, or US assets for income and capital protection. What is an example of 60-40 group formation? A moderate risk accepting investor may select a 60-40 funding structure with 60% funding in shares, 30% in pledges, and 10% in cash. What monetary tools are considered high-risk investments? High-risk investments comprise choices, initial offerings, IPO, and foreign emerging markets. How does risk tolerance relate to risk capacity? While risk tolerance actions and investors' readiness to take dangers, their risk dimensions determine their financial ability. I hope you like this video. If you want to become an investor, thank you very much for watching my video. Thank you. Bye for now.